Welcome back, GameStop investors. If you guys have been following the content on this channel, I told you I've been digging into a half dozen other companies that have issued warrant dividends over the last 5 years, doing a little bit of investigation about the details of those warrant dividend issuance, how it worked out for the company, how it worked out for investors. And you're going to be pretty excited, I think. There is one example in these 6 companies where investors who are holding these warrants are up 25x if they bought in at the low price of the warrants. And we will be going through that example today, as well as some of the examples that have not worked out, or just some that haven't reached their expiration date. And we'll check in and see how they're doing. So if you are the type of investor that wants to learn absolutely as much as you can about warrant dividends to help your analysis of your game plan for GameStop, stick around. Let's get right into it. I have provided you guys in the last week or so 3 videos on warrants. If you haven't seen them, please go back and watch them. The first one is Warrant 101, a little bit of background on exactly what is GameStop doing here. The second video is the no exercise early theorem, and why you're going to see, even in today's results with other companies where investors are massively up on the dividend warrants, that they have not exercised them. It's important that you understand what no exercise early means if you're having institutional investors involved in these warrants. And then in yesterday's video, we went over how institutional investors are likely to hedge warrants by going short the stock if they plan on holding it all the way till expiration. A lot of great information there for you if you are truly someone who wants to learn. I see some of the comments from the cult members, people that don't want you guys to get educated. They don't like these videos because I don't know. I'm the only one talking about it, but you can fact check everything that I'm providing you. This is all factual information, and please do go fact check it. And if you find anything incorrect in the information I provided, leave an intelligent adult comment and let's have a conversation, because that is how everybody learns. Calling me names, leaving me insults just reveals yourself as a childish cult member. And, you know, this channel is not for you. Sorry. Before we get into the half dozen other companies that have issued warrant dividends, a quick look at the GameStop chart. It closed Friday at 26.08. I've been telling you guys I wanted this week to close over the 200 moving average, which was just under $26. We achieved that. That is excellent work by everybody keeping this price up. If you're curious about my trades, the buys that I've done are on the bottom of the screen in purple, and my sells are on the top of the screen in red. My most recent entry on GameStop was in the middle of June at $21.61. Leading up into the warrant distribution date in early October, I am mostly bullish as long as the chart keeps on giving us the same signals that we had last week. And what I would like to see going into next week is that 200 moving average act as a line of support for the stock and get some continued upward momentum, hopefully, as we approach October 3rd. October 7th. With that TA out of the way, let's get into the companies that have issued warrant dividends in the last 5 years. It's actually going to be 7 of them. And I just want to say up front, this information is being provided so that you can do your own research. I'll share with you what I found out. And every single one of these companies is not GameStop. Every single one of these companies has their own unique set of financials and their own unique set of warrants. And so this is just information for you to analyze, and maybe it will be helpful to you in understanding what might happen with GameStop. Maybe we just add GameStop to this list of 7, and we have 8 to evaluate for the next time around. Hopefully you find this information useful. Let's go through them, and I'm going to go through them in alphabetical order. Here are the 7 tickers that we're going to look at in alphabetical order. We're going to note on the chart how the stock performed, the date that the warrants were announced, the date they were distributed, and since then. And some of these tickers have several years of data for us to look at. The other thing that I want you to notice over in the far right-hand column, if you watched my no early exercise video, you will notice in the right-hand column how many of these warrants remain unexercised, even though in some of the cases here that we're going to look at, the warrant holders are massively in profits. I don't want you to underestimate the no early exercise theorem, and I want you to carefully consider it as you evaluate for yourself. Hold, exercise, or sell. In alphabetical order, the first company we're looking at is Danaher Scientific. The ticker symbol is DNMR, but unfortunately, this is the worst of the bunch. The company ended up filing bankruptcy, so now they have a Q on the end of their ticker. The yellow line, the vertical line here, is when the warrants were announced in 2024. The purple line was when the warrants were distributed, and you can see that the announcement and issuance of warrants had no effect on the stock. The financials of the company were a bit of a wreck. It only went down, and the company is currently worth a fraction of 1 penny. The next stock chart that we're going to look at is for Diana Shipping. Ticker is DSX. We'll look at the warrant chart in just a second. Over on the left-hand side, you'll see in 2023 in yellow the date that the warrants were announced. And then in purple, the date that the warrants were distributed. It did go down between those two dates. And these warrants have a exercise price of $4, but DSX is one of two companies in our list that offered bonus shares if shareholders exercised early, 0.5 shares extra, and that made the effective exercise price $2.67, and you can see that with the green line and the white line here. The stock traded above that green line for quite some time, about 8 months or so, and since then, it has not been trading above the exercise price. It's only gone down. According to the spreadsheet, 72% of the warrants still remain. 27 million were proposed. 72% remain unexercised. And these warrants expire in December of 2026. In terms of the warrants, how did they perform? This is the chart for the warrants themselves, issued in December of 2023. They peaked on that first day around 57 cents. They reached a high of 89 cents in the middle of 2024. And then along with the chart, the main ticker, the stock going down, the value of those warrants fell all the way from 89 cents to 4 pennies. And as we talk about institutions hedging their warrants, like in yesterday's video, you can see how dramatically the gift that the company gave you could deteriorate in value. Imagine if you were an institution that had millions of these warrants worth one day 89 cents, worth a couple months later 4 pennies. You might understand why institutions are going to hedge their warrants. And if you don't know what I'm talking about, please go watch yesterday's video. The next ticker on our list is ENVX. The company name is GMEWS Corp. And what is unique about this one is they had a early exercise provision in their warrant agreement where the company could announce, hey, we've been over the VWAP for 20 out of the last 30 days, this certain level that we've identified in the warrant agreement. And if that happens, we're going to let you know that we're going to pull in the expiration date of the warrants. And that is what they did. The warrants were announced in July of 2025. Distributed in purple there in July 21st, 2025. And the company canceled or expired the warrants at the end of August 2025 because the stock remained above the exercise price. What else is unique about this company and what they did with their warrants? The exercise price, the day that the warrants were announced, the exercise price was below the current price. This was a guaranteed everybody is going to exercise. And, you know, the way that I kind of view GMEWS is the company did a little bit of a parlor trick here, my opinion. It's an ATM. but the shareholders get to fully participate in it. Why do I call it an ATM? Because they set the exercise price well below the current price, meaning everybody was immediately in the money, meaning immediately it made sense for everybody to exercise or sell their warrants. And that became even more dramatically the case once the company said, hey, we're pulling in the exercise date and you have 24 hours to make up your mind. In 24 hours, these warrants are going to expire. In terms of how the warrants themselves performed, the first day you can see trading almost at $8, and they only traded for a couple of months. After about 10 days or so, they took a big drop down to $2.81. So just within a matter of days, they dropped from $8 to $2.81. And then the day that the company announced the early warrant expiration, the warrants plummeted in value from $1.60 down to 50 cents. And then if you didn't exercise them, your warrants got canceled. What conclusions can we draw from this? The company successfully did its equity raise. That's why I called this essentially an ATM. They got their money, the company got their money, and investors who sold their warrants in that first week or so did okay. They did okay. They made $7 to $8 per warrant. The longer they held on, the worse they did. That is not going to be the case with every warrant we look at today, and I'm not saying that is going to be the case with GameStop. It's just a data point to look at, and the financials of Enovix are not anything to brag about. And that was some of the problem with why the stock price and the warrant price declined here over time. The next ticker on our list is LGL, and this is a very long warrant. They were issued in 2020. They expire in November of 2025, so just a couple months away. And there is something unique about this one as well. You can see two horizontal lines here. We're going to talk about those in a second, the white line and the green line. The yellow is where the warrants were announced. The purple line on the left is where the warrants were distributed. The white line is $12.75. That is the exercise price. The company did a spinoff of another company called Mtron in October of 2022. And because of that spinoff, the stock price was adjusted as well as the exercise price of the warrants. That is why we have a second lower exercise price here of $4.75. The other thing of interest with these warrants for LGL is that they are European style. GameStop's warrants are American style. What is the difference? American style warrants, you can exercise them at any time from the distribution date to the expiration date. European style warrants, like LGL has, can only be exercised at the expiration date unless a certain triggering event happens and they set that, a certain price level for the stock. If we consider those trigger prices, which could allow early exercise of a European warrant, the initial period was $17.50. It never hit that trigger price. And after the spinoff of Mtron, the trigger price was adjusted to $6.65. And if that price was ever exceeded for a certain number of days, then you could exercise before the final expiration date. March 2025, the European trigger of $6.65 was exceeded for LGL. And if you wanted to exercise your warrants, you could do that. So far, 96% of these warrants remain unexercised. If we want to consider the chart of the warrants themselves, ticker LGLWS, they traded as high as 91 cents back in 2021. We had that big drop in price in 2023 due to the spinoff, and the warrants are currently trading at 40 cents, although they did have a low in late 2024 of 7 cents. That's again, quite a bit of volatility in the value of these warrants, and you might understand why some institutions might want to hedge their warrants against volatility or against price declines. Refer to yesterday's video about hedging of warrants. We are almost to the end of this video, and the ticker you want to see that is up 25x on the warrants, but let's crush through these last couple tickers and talk about what is different on them. MPTI, Mtron Industries, has European style warrants that were issued in March 2025, the purple line here, vertical, and they have a $47.50 exercise price, but because they are European style warrants with a expiration date of, what is it, March 2028, nobody can exercise these warrants. They're 100% still outstanding until or unless it exceeds the European trigger, which is $52. It has to be over $52 for 30 consecutive days. And even though it did go over that $52, you can see here in April and early May of 2025, it did not hit the required 30-day consecutive. So these warrants remain 100% outstanding, 100% unexercised. And we have still about 2.5 years to go till we find out what happens with these warrants. It is also interesting to look at the warrant price chart because, I mean, that stock chart looked okay, right? These warrants came out of the gate at $7.65. They fell all the way to 51 cents. Again, I present this data to you so that you can have some data to look at to consider what might happen to GameStop. I don't know if they come out of the gate hot and get crushed after they've been out for a few weeks. We've seen several examples now of companies that had that happen. These warrants, again, started out at $7.65, fell all the way to 51 cents, currently trading at $1.74. And if we want to look at the stock chart itself again, how is the stock doing? It's basically been flat, but a huge amount of value, and those warrants got wiped out. $6, almost 70% of the warrant value gone. I say the stock has been trading flat. I mean, actually, it's gone up quite a bit since the warrants were issued. It was trading at $38 when they were issued. It's at $52 right now, yet the warrants are down 60%. Go figure. Just saying, be prepared for anything and be careful what you believe out there on social media about what might happen. You never know. That's why these things are important to look at. Maybe you go look at this one and you find something that I missed. If you do, leave me some comments down below. Almost to the very end, and then we get to the best, which also happens to be the last in alphabetical order. But let's knock this last one out. Neighbors Industries, ticker NBR. Warrants were issued in May, June of 2021. They expire in June of 2026. So half a year or so left on these. And they had a $166 exercise price. You can see in 2022 that it was over that price several times, even into 2023. This company also had that bonus shares where if you exercised in a certain period, you could get some extra shares, and that effectively lowered the exercise price to $125, which it has been over, many times up until the end of 2023. And then the stock price fell, and it's currently trading at $37, unfortunately. Despite that very long duration of time in which this ticker was above the effective exercise price of $125, 78% of these warrants remain outstanding. A lot of people were holding. Looking at the chart for the warrant NBRWF, I guess if you were hedged like an institution, you're probably doing okay. But if you were just holding those warrants as a shareholder, you pretty much have been wiped out at this point. The value of these warrants has fallen from a high in May of 2022 of $62 to a low of 10 cents. 99% gone. And they're currently trading at 51 cents. Again, if you went short as an institution to hedge your warrants, you're doing just fine. Retail traders who are just holding and waiting, hoping for the best, pretty much wiped out on these warrants unless something substantial changes at this company before the warrants expire in June of 2026. All right, last but not least, we've seen all of the bad things that can happen. Show us a good case, Tony. There was one, and the ticker symbol is OXY, Occidental Petroleum. These warrants were issued in August of 2020. They expire in August of 2027. That's a long time for these warrants. The stock was trading at around $14 at the time that the warrants were issued. It ran up as high as $73 in 2022. It's currently trading at $46. And, you know, if you're trying to swing trade warrants or even the stock, look at this. After the warrants were issued, the stock plummeted all the way down to $8. Can you imagine buying the stocks or the warrants? We'll look at that chart in just a second. Can you imagine buying at these lows and then riding it up? But this is what happens when a company has fundamental improvement like Oxy did. Then you get your share price going up. And when the share price goes up, the warrant value goes up too. The exercise price on these warrants is that white line horizontal on the chart here, $22. It ran up to, what did I say? It ran up to $73.52, currently trading at $46. Do you think that everybody exercised the warrants, or do you think that since they don't expire till 2027, that maybe the no exercise early theorem is at play here? What is your guess? Put it down in the comments below. The answer is 43% of these warrants, even though they're massively in the money, 43% of these warrants are still outstanding. Again, I can't predict what is going to happen with GameStop, but I can tell you about what the norms are about how institutions follow this rule that we call the no exercise early theorem, and how they hedge warrants to hold them until very close to the expiration date. 43% of these warrants remain outstanding. Now let's have some fun and look at the chart for the warrants themselves, ticker OXYWS. They came out of the gate when they were issued around $5, fell when the stock price fell to $2.29. So they immediately lost 50% of their value. However, the company recovered. The company recovered, fundamentals got better, and not only did the stock price run up to $73, these warrants 25x'd from $2.29 to $55 at their peak in 2022. They're still up handsomely, trading at $24.38. Almost no matter what you did, you're in good shape with these warrants. Although, you know, $55 down to $24, they have lost 50% of their value since their peak. Hopefully the stock price continues to go up and warrant holders can recapture some of that value if you didn't sell at the peak of $55. Maybe you can recapture it before the warrants expire. If you were an institution hedging your warrants, you would increase your hedge by going short more and more. The higher the stock got, the higher the value of the warrants got. And you know, you were very short when the warrants were worth $55. And you have not been harmed as an institution because you properly hedged your warrants. Even though they've lost 50% in value, your short hedge has gone up in value. You have looked together with me at half a dozen companies that mostly did not do very well fundamentally. Their stock prices went down, warrant values went down. We looked at one example where the stock is trading flat and the warrant price still went down. And here we have a company that overachieved in terms of fundamentals. Stock price went up and anybody holding the warrants was handsomely rewarded. What will happen to GameStop? I don't know. These are 7 case studies for you to reflect on and at least be aware of what could happen on the positive side here, like with Oxy, and on the negative side of some of these other ones. You guys know that I'm bullish on GameStop. The company's not going bankrupt. They have almost $9 billion in cash. We're waiting on Ryan Cohen and GameStop to announce some use of cash to transform the valuation of the company. I say there's no reason why you couldn't have an Oxy type situation over the long term with the value of GameStop's warrants going up. However, what's different here? This is a 7-year warrant. GameStop's is 13 months. Man, so much to consider. So much to consider. I hope Ryan Cohen and GameStop have good news for us before October 30th, 2026, because I sure would love to be celebrating a 25x on the GameStop warrants with you guys. Back to the GameStop chart. Again, I don't have any narrative to tell you. I don't know what's going to happen with GameStop. I am bullish, as I just outlined for you, and we will have to wait and see. But I will tell you, be very careful as you're listening to social media narratives, because nobody knows for certain what is going to happen. It's perfectly fine to make whatever bet you want to make. However, you must own your outcome. And if things don't work out, we can't go blame crime. We can't blame the shorts. It's very predictable what warrants are going to do. They're going to follow the fundamentals of a company, and they're going to be hedged by institutions by shorting the stock. And then everybody crosses their fingers and hopes that Ryan Cohen and GameStop announce some good news before October 2026. That's in their hands. That is in their hands. And I'll be riding right along with you and hoping for the best. Leave me your comments down below. I hope you got some value out of this. If you're new here, hit the subscribe button and that alert bell so you don't miss any of our coverage of the GameStop warrants as we lead up to the distribution date around October 7th. I'm Tony DiNardo. Thank you for hanging out with me on this Sunday afternoon, and I look forward to your questions. I will see you on the next video.